Hello, everyone. Thank you for joining us today on our webinar today with our folks at Avalara. Our webinar today is Sales Tax Play-by-Play, how to tackle economic nexus with your ERP. I want to go over just a couple of real quick housekeeping items. All attendees are in listen-only mode. If you have any questions during the presentation, we'd ask that you please submit those in the GoToWebinar question box. Please don't hesitate to ask those at any time during the webinar today. We will be back around at the end to answer any questions that you might have. And if something happens, we don't get to all the questions, by using the question box, we will record those, have a record of those, and we'll be able to get back to you. So again, while we will be answering questions at the end, you don't have to wait till the end to submit your question. Today, we are also recording our session. You'll get an email tomorrow with a link to the presentation today. So we've got Matt Patrick, a partner sales manager with Avalara, and he's going to be taking us through today's presentation. I'll turn it over to him, and I will be back at the end to facilitate any questions that you might have. So with that, Matt, I'll pass it over to you.
Wonderful. Thank you, Rocky, for the introduction. And we're excited to talk tax yet again today. Thought we'd do a little theme around football season and the core central theme that businesses are tackling in the sales tax environment today. So let's just kind of take a look at what to expect in today's call or meeting. We're going to review just that. What is economic nexus? What's driving it? What does it mean to you? What are companies doing around economic nexus, and how does it apply? Because as I described, it's just it's a challenging topic for businesses, small and large, to tackle, and what to do about it to automate some of the compliance issues that come out of it. So we're breaking it into 3 plays, right? Play 1 will be really that automation, what goes on in the ERP. What are some of the things that we do today to configure our ERP to manage sales tax? For context, in these types of meetings and webinars, we have different kind of personas that come in to learn a little bit about the subject, right? So we'll have a controller, we'll have someone maybe that's a senior accountant that's newer to the role of sales tax, is trying to get a sense of what's new out there, content-wise, related to what are changes coming down the pike that they might be needing to know more about, or what are tools to make their life easier. And then you may have someone from IT or just in the business in general that are looking at what are business issues, what are things that might touch my department, how should we look at the subject. So we'll kind of speak to and talk to those different areas as we go through. One of the other themes in play 2 that we'll talk about is that in this area of economic nexus, how it's impacting, how companies might look at a program that's been around for a while, really since '99, and that's SST. For those not familiar with it, I'll totally explain what exactly it is. Acronyms are difficult in the tax space. They're all over the place. We'll kind of spell out what that play looks like. One of the things we don't always do, but I thought it might be helpful to do in this session, is to kind of show, all right, we're talking about some of the themes that are driving the complexity, what the complexity looks like in the ERP and some of the programs that are out there to make life easier. What does it really look like to automate tax within an ERP or billing system? What does tax reporting and the filing process look like? What's the challenges with exemption certificates if you go from a few states to 20 states? So we're going to kind of cover all of those nuances or topics today, and we'll jump right in. So what is this Wayfair thing, right? South Dakota Wayfair. South Dakota, known for many things. Now they're known for this. What Mount Rushmore is obviously what you think of. What is it? The huge Sturgis bike ride, I think, is out there. And Wayfair, if anyone's not familiar with Wayfair, who is that? Think of it as an online furniture retailer, right? They're kind of like the Amazon of furniture retail. It's a pretty cool app if you haven't really used it before. I mean, you can take a picture of your room and you can select different pieces of furniture to see what it looks like in your room. And then, of course, obviously hit the buy now button and boom, you're on your way. Well, South Dakota, as you can imagine, I think there's like less than or right around 1 million people in the entire state. They don't have many companies that have physical presence in the state of South Dakota. So in 2018, they were taking a court case to the Supreme Court versus Wayfair to get their opinion, because South Dakota's opinion was, companies like Wayfair that are selling remotely into their state should have to comply with their position around what they call economic nexus. An economic nexus for them is that, or as the way they wanted to define it, was basically 100,000 in total sales, so taxable and non-taxable, or 200 transactions. And the point of this was really to get away from what was traditional triggers to compel companies like Wayfair or other companies to be forced to register in the state of South Dakota, to collect the tax on behalf of South Dakota, and obviously remit the tax. Look, every state's looking to expand their tax base. And as you can imagine, in football and in the tax world, it's a copycat league, right? So what one state does, another state looks at and says, is it good or bad idea? How can we implement the same thing? So this is kind of what you were seeing is South Dakota was positioning the legislation. The Supreme Court weighed in on it. They approved it and weighed in favor of South Dakota. And all along the way, almost every state had a very close eye on this particular legislation and were already drafting what their language would look like. And predominantly what their language was going to look like was the language that came out of that court case that the Supreme Court had already ruled upon, because it's just simpler to implement, more difficult to fight in terms of what's already been legislated. So particularly right away, I think it was 3 states. The court case happened in June. 3 states went live with the law in July, which was totally impractical. But nonetheless, it's state government, so what do we expect? But by the end of the year, you're really talking, it was already like half of the U.S. And, as we look at what the map looks like today, the vast majority of the country has implemented within just over a year economic nexus across the country. And there are a few states that have a couple different thresholds in terms of either dollars or is it taxable sales, or is it both taxable and non-taxable sales, or do transactions count, or is the threshold higher? But 80% or more of the blue states that you see really took the language and the thresholds of the Wayfair case in South Dakota and just really implemented the same language. So, what does this mean, or what are companies dealing with, right? If you're a manufacturer, a wholesaler, we see it all the time. And this space too is kind of morphing into, how can they at times sell to markets outside of their traditional market, more of a direct relationship where sales tax is becoming more of an issue. But, these companies like them, what can happen is, since the law states that it's total sales in the threshold and those non-taxable sales that they're selling into these states, doesn't matter if it's online or not, you're selling across, it's no longer where you're located, it's where you're selling to, where are your customers basically. And what's happening is that they'll have all of their sales all over the country, and from a factual perspective, they have cross the threshold with their non-taxable activities. So when they're talking with their sole firm or they're looking at it, what they're coming to realize is that, traditionally they've only collected exemption certificates for some of the states they had a presence in, because that's what they needed to reproduce in the event of an audit to reduce or eliminate tax exposure in that audit. All these new states, they had to now go ahead and, for example, this one had to collect 1,100 new certificates, or National Wholesale needed to collect 5,000 new exemptions. I know I worked with a company that they were based in Oregon, and they sold the jewelry in both big box stores, small retail outlets like boutique shops, and they, of course, sold directly online. And if you're familiar with sales tax in the state of Oregon, there's no sales tax, right? So the domain knowledge in the business around sales tax is very limited, because just traditionally they didn't have to deal with it much at all. they had no physical presence anywhere. And when this went into effect in June of last year, they literally had to go from one state with no sales tax to 30 states, calculating tax on a custom website that needed development, to collecting over 7,000 exemptions, and had to file in, I think it was 30 some odd states. So, I mean, the dynamic of dealing with that just over a 12-month period is quite substantial. And we'll kind of talk about some of those issues, both within the ERP and just what solutions or tools are out there in the marketplace to help solve those. One of the things that we certainly always recommend as you look at these compliance obligations is, talk to your advisors, right? Talk to your CPA. Do they have a practice area around state and local taxes? If they don't, do they have a recommendation local to you? If you do need help around Nexus studies and things like that, and you want to work with us on us performing a Nexus study, we certainly can do that, but we'd always advise you to really talk to the professionals that already know your business and get their context or advice on the issues and what you're hearing out there as it relates to economic nexus. One of the things that comes up out of this is, if I'm registered in 1 or 2 states, I look at my analysis around economic nexus, and let's say I have to enter 20 states. The paperwork alone just to get registered is just a nuisance, right? Who's going to do it? When do I have time to do it? Where do I get all the forms? Where do I go? How do I make sure I fill out the form correctly? We do have services directly through Avalara where we'll do all the paperwork for you, get you properly registered for sales tax purposes in those jurisdictions, and get you set up. Another theme out there, especially if you're a company selling, I would say this impacts more online sellers, in that, or companies that sell their products through marketplaces like an Amazon or, you name it. There's a ton of marketplaces out there today. States have really started to move towards having or forcing marketplaces like an Amazon collect the tax on behalf of companies, selling their products online. Instead of having you to report it, they're trying to get marketplaces like an Amazon or Etsy or eBay to collect the tax and remit it accurately. We continue to see this really being a theme pretty much across the country. You're likely to see these kind of laws, which are somewhat beneficial, you think, initially. Part of the downstream problem of this type of law is when you think about the mechanics of how the numbers all come together for tax reporting. Because, we see instances where, I have phone orders directly entered through my ERP. I have 3 different websites. I have products sold on Amazon or 2 different marketplaces. I have my own website. So when you think about where the tax reporting you're obligated to report and file, and then you have the nuances related to marketplace laws and how that's reported and filed, that's really where some of the more of the complexity comes in around these marketplace laws. And more than happy to talk to folks out there about what to expect with these marketplace laws and reporting and filing. So we always like to kind of give you that visual. What does the landscape look like today around marketplace facilitator laws? It's pretty broad, right? So you're kind of seeing the theme of economic nexus passed. What do states do? It's a land grab for tax collection. So why not also facilitate making some of that tax collection easier by getting it through one vendor like Amazon or other marketplaces than tens of thousands of smaller businesses directly through their shopping cart. So automating compliance, right? Why do it, right? What's the common issue or theme around automating compliance? The known quantity in this whole market is everything changes, frankly, right? The rates can change, tax boundaries can change, taxability rules can change. What do I mean by taxability rules? States are looking more and more about how services are taxed, right? Or your accounting fees, they're normally non-taxable. Maybe a state wants to tax them, right? It makes no sense in one state, they'll tax like a horse and buggy ride, but not an Uber ride, right? That makes no sense. if you want to take a horse, you can get taxed for that, but everyday people are using Ubers and taxis and other things, and they're not getting taxed. So it's only a matter of time before those things continue to start getting looked at more closely and get taxed as well. There's changes in reporting requirements going from, various frequencies or just how the forms can change. And it's just it's an ever-changing area of compliance for businesses to maintain. When you think of what are some of the thought processes as you look at building and maintaining within your ERP, there's common things that come up, right? So, you need a source of where do I get good content to know what the rate is for a zip code. So then, businesses have to think about, well, where are my access points to get those rates? What's my procedure around getting updates for those rates? Is it monthly? Is it quarterly? How am I getting that information? How am I consuming or updating the billing system today? Is that also sharing those updates to other systems that need tax changes? And then how does that impact reporting, right? So depending on how you configure your schedules can make a difference on the level of effort you're working with on reporting and filing. A good example is California. Companies that kind of set up their schedules manually in a way that's a bit more descriptive can get to a California tax return a bit easier than being more general, because you're basically getting into Excel and having to reverse engineer the numbers to the tax return. And there's other things as well, right? So address validation, sometimes customers already have tools for this. If you don't, though, you got sales folks updating addresses on a customer account, and, let's hope they're at least 80% effective. We all know that's might be a debatable number. But address validation can certainly impact a variety of things. Of course, it can impact the accuracy of the tax decision, and obviously just the common chargebacks and other things related to shipments. Product taxability, right? So if you have a product or service, you're in 10 states. If it's taxed one way in 10 states, a different way in 5 states, you have to configure your ERP in order to apply those various tax rules on that specific line item or group of items in the billing process. So it's, again, more manual configuration. And as I stated before, if a state were to change their position on it, there's a maintenance requirement. Who's doing the maintenance to think about how does that change? Is there legislative change on the horizon that could impact how that's being taxed today? And if you're certainly in a situation where you're exempting it today and it moves to taxable unknowingly, you may find out years to come that you have a tax exposure plus penalties and interest because of a change in taxability. Some states have like thresholds, right? So Florida has what they call the single article tax. Tennessee has something similar. There's thresholds related to taxability in examples like New York with clothing. But what I'm referring to is that if the size of the invoice is over a certain amount, different rates can apply, or surcharges can really apply to the transaction. Another item that we see constantly kind of come up in customers that reach out to us, and generally they're reaching out because they're involved in an audit and they're determining or understanding now that they were not sourcing the transactions correctly. Examples of that really oftentimes come around combinations of origin-based versus destination-based. Where is product being shipped from to the customer? Think of examples like in Arizona. Arizona has a sales tax rate, then they also have a seller's use tax rate, which, everyone hears use tax, you think of use tax on your purchases. But what this distinguishes is between a sale made in-state versus a sale made out-of-state into the customer. You see this too in California, where you got product shipments from California locations to California customers versus something coming from outside of California into a California customer. There's a lot of nuances on just how does the state determine what jurisdictional taxes apply on the state, county, local, and special jurisdictional taxes. This one comes up from time to time. It's just, hey, some states have tax holidays, turn off tax for 2 days, a week, whatever it is. What products does it apply to in the products that you sell, and how does it work? So automation, as it describes on the right hand, it's really designed to handle just this component, and we're not even referring to all the other components that are pretty in depth as well around customer exemptions, because customer exemptions can range from a variety of scenarios. Common exposure gaps with exemptions are, I have a customer, they're in 5 states that I sell to. I have an exemption on file, but I only have exemptions on file for 3 of the 5 locations in 5 states. So if I get audited in the one state, I'm missing that exemption. Now I got to, obviously backtrack and try to get that exemption, or I could be exposed, especially if they were going out of business. And there's different types of exemptions. There's renewals, there's expirations, etc. So everyone's doing this because obviously the feeling is as they go into more states, the likelihood of getting audited goes up. When you think of Economic Nexus just passing last year, it's probably going to be 2021 when states really start to get mobilized to look at enforcement. What I mean by that is generally auditors want to look at a 3-year look back, and they're going to start likely to start investing into what's that infrastructure look like, start looking at what does enforcement look like of Economic Nexus. And obviously that's a concern for many as, just looking at applying or complying and when to comply, or what are the exposure over time of non-compliance. So in terms of top performing organizations, where they're at on this subject, the majority of them have really indicated they're more than likely to be leveraging, obviously, tax automation. And there's just so many purposes around that, but mostly because oftentimes your quote unquote top performing organizations are also in growth mode. And growth mode indicates a lot of changes that are really trigger points that oftentimes relate to tax requirements, meaning I'm entering new territories, I'm hiring new sales reps, I am selling more into new states, right? That nexus trigger and obligation and complexity around new products, new business lines, they made an acquisition. All of these moving parts really drive complexity around sales tax, thus automation is significantly more likely. Because they know what's below the surface in terms of dealing with tax compliance. So we talked about Nexus, we talked about product taxability, jurisdictional assignment, exemptions a bit. State and local filings, pretty self-explanatory. Audit readiness, that's just it, right? So nobody wants to do this because it's fun. It's really a drag on the business. It's not a profit center. It's just it's an inefficiency. It's a cost of doing business. So, in the cost of doing so, you want to be able to do it in a way that if an audit were to occur, are you in a good position to be prepared for the audit and have no or limited exposure? To talk a little bit about, how Avalara really solved this challenge or what we do in the marketplace. A little history on Avalara itself. We're a business that started in 2004, and our first real conference that we went to was Convergence, right? So we went to the Microsoft Convergence in 2005, and founders of the business could see right away that the folks that they were talking to there, this is their market they need to enter. When you think of the time, what were the common ways to solve sales tax in those days? It was manual configuration of your tax schedules. It was loading rate tables into the environment and trying to keep them up to date each month, and then having issues with the load or the fact that you're reversing transactions from prior periods, and the zip codes weren't always reflecting what the actual rate was for the customer. It didn't handle taxability. It didn't necessarily improve your reporting. It didn't handle exemption collections. On and on and on. So they noticed right away, there's a product market fit, but what's needed is we need to take all the moving parts, put them in the cloud, have a team of tax professionals really maintain those moving parts so that we take that complexity out of the ERP or the billing process. Because what was also starting to become transparent was that there was going to be several scenarios in the small to mid-market, especially where it's not just one big legacy ERP billing system doing all the work. That the future market was there was going to be your core solution, but to have an e-commerce solution, to have other channels where sales were going to occur, and building those integrations into other systems was really going to be key to make this a simple process that can be executed efficiently. So after they built the integration to Dynamics GP, certainly we've added AX and the Vision and, have them certified, and we moved into Business Central and F&O and the rest. But over time too, we also acquired a leading product to manage exemptions, because what we were seeing in the marketplace is the common thought would be, sales tax, it's got to be retail companies, right? They're just selling widgets online. I mean, that's got to be the core market. The reality is that the manufacturing and distribution space has been a significant market for us, because there's enough complexity between the combination of situations they run into, from the sales tax side, their customer exemption scenarios they have, the documentation and audit situations they have to not be exposed in the event of an audit, use tax requirements. I mean, it just kind of runs the gamut. And it's been a core market for Avatex. We'll kind of touch upon what does CertCapture do, how does it solve some of the challenges of growing into new states or just managing documentation related to exempt sales. Compliance, you think of, we're a system that's recording and capturing all of this tax data from all the details on the transaction, each line item, each state and county local calculation on that transaction. It makes all the sense in the world to create the operational leverage that within the same environment, we take that data, feed it over to a tax return, and basically operate like a payroll service, right? Where we take one amount out of your account and go fund and file the returns. So we kind of go through what that might look like. SST, I did want to talk about that as another big theme that we're seeing out there. So again, what is Streamlined Sales Tax Initiative? The Streamlined Sales Tax Initiative is basically a group of states, the ones that you see here in green. Back in 1999, they came together to try to drive basically to expand their tax base, right? They wanted to expand their tax base by trying to incentivize businesses that sold remotely into their state and didn't have physical presence in their state for them to register. And the carrot that they were offering was, well, if you do that, you have to register in all 24 states, but we'll pay for the software and we'll pay for the cost of filing tax returns in our state. So that was kind of the good and bad about the program. But the program had some very defined rules, and the biggest rule that was of detriment at the time that changed earlier this year that has made it more of a theme for companies to be interested in it is that if you wanted to participate, you had to enter all 24 states. And with Economic Nexus, and if you have Economic Nexus in 5 states, do you really want to enter 24 states? Nobody really wanted to do that. It wasn't a big deal prior to Economic Nexus, because oftentimes folks just had physical presence in these states or they didn't. So with Economic Nexus, though, what they changed earlier this year is they said, you know what, given the current environment, we're going to allow you to register in the 5 states. You can take advantage of the benefits of the program, and you can choose not to be forced to register in the other remaining 19 states in that example. So pretty significant shift. It certainly makes sense at times to look at, do you qualify? What are the parameters for those qualifications? And as a certified provider, we can get you registered in those states at no cost. It reduces what you spend in the software, both for determination of tax and of the filings. So let's take a look briefly at what is Avalara, or a tax solution. What does it really look like within a billing process or billing system? I always like to say the process generally starts where you can imagine it might, right? Your customer setup. So when we think about what we currently do today, and just going back to what we saw earlier in PowerPoint, is that if I'm setting up the Canon group today, I would normally need to pick or choose a schedule for tax, a tax area code, turn on your tax liable box. This is Business Central, but this product works really the same in GP or 365 F&O or AX. I mean, it's the same components that calculate tax. It's very much the same infrastructure to do so, to use it within the application. So instead of having to build how many jurisdictions are there? 15, 16,000 separate jurisdictions. If you reported everywhere across the country, you're just replacing that with AvaTax as your tax schedule. And that's telling the billing system to no longer look at its native components, but to send all transactional detail to the tax determination engine in the cloud, and we'll determine tax on your behalf. So think of in the cloud, that's your tax policy, right? That's where everything's going to be configured, from how many legal entities do you have, what transactions flow to each entity, where do you have Nexus turned on, your tax return filings, it tracks your economic nexus. So that's all managed there in the cloud, but really day to day from a user's perspective, it's very straightforward in front of you. I had mentioned address validation. If you're going into addresses here or in the ship to area or in the vendor area, you can hit Control A, and it pops up a window that will really show, what you entered versus, what the validated address is against the Postal Standard Service database. That's nice to have on the fly, but one of the main utilities of the address validation is that, like any implementation, if anyone from the IT is on the phone, knows that the addresses are oftentimes one of those, we know it, you have good or bad data, right? So it's an opportunity to really kind of clean up some of your address information as you look at implementing tools like AvaTax or tax determination. So let's say I set up this customer. Let's just go ahead and create a sales order. And everything really remains the same that you're used to. Meaning, I'm going to go ahead and type in an item. Let's put a quantity of 10. All right, so we have a taxable basis of $525. Now, one of the things that we'll notice here is this unique code, tax group code. You don't see this number in your current setup, but what that represents is if this item has state-by-state taxability, it's already been pre-mapped to a Avalara specific content code. Behind this code is the recipe card of how it's taxed in various states. So, for example, if this were for some reason taxed at 1% in Connecticut, no tax in Virginia, fully taxable in Washington, you're not having to create those ERP specific rules related to this item or group. We're doing that behind the scenes. And in addition, we're doing the ongoing maintenance of the content so that if a state were to change their position, we're there to obviously update the content and get you in the right position to calculate going forward. Common things that come up certainly is everyone's used to using the statistics button in this environment. And that's just in this case, of course, looking at the order plus tax, right? So what does that really look like? It's everything that they're used to. So if I close out of here and I go to the next screen as well, you're going to see the total amount plus tax directly into the system coming from AvaTax on this estimate. Now, this is an estimate for tax, right? So we're not recording anything in our solution yet in terms of our reporting. It's when you post the documents and invoice from that perspective is when it's really recorded as a transaction for tax purposes in AvaTax. What does it look like in the environment? When you install it, you will notice you're going to notice an AvaTax module to point the instance of our system directly to the configuration. So after you really install our product in any one of your environments, you'll see an administrative module for AvaTax as part of the new footprint that's administering this within the billing system. But let's go to what this looks like in the cloud. So I had mentioned before, AvaTax, or that, you think of that screen or PowerPoint that had AvaTax or tax determination in the middle, cert capture to the left, compliance to the right. This is the core engine, right? This is what's driving the ship and what direction you're taking. It's where all the information is stored. for your compliance, but it's the engine that's making the decisions that we saw in BC moments ago. And when you first log into this environment, one of the things, again, it's an ongoing topic. What are we doing about it to help customers? It's that economic nexus discussion, right? So customers are asking, have we met the threshold? What is the threshold? Do you have our transaction information? Did we approach 200 transactions? Did we go over 100,000 transactions? If we did, when did we do it? What's that information look like? It's all on the dashboard every time that you log in, and you can, get an email on that that you're crossing the threshold. Now, what we don't do is just say, hey, you crossed the threshold. We're going to do registration paperwork for you, and you're off to the races. This is a tool for you to look into to confirm, what, this is good information. I'm going to take this and ask Avalara to go ahead and register in that state, or I'm going to do it myself, or I'm going to talk to my CPA. We'll confirm from there. Whatever that looks like, customers make their decision or take their position. And then if you want to go ahead and have us register for you, you can literally do that directly through this screen to initiate the registration, and have it'll go to your customer account manager. They'll talk to you about what that looks like and get you set up in the next state. But what does getting set up or turning on content look like, right? So if you think of if I'm a single reporting entity or multiple reporting entities, this example will just show really a single reporting entity. But you'll have transactions that are getting pointed to from your instance of your billing system that will flow through a company code, but also really specific to looking at, well, what Nexus do you have turned on and for what locations, right? So by turning on, let's just say, for example, I know I'm entering California January 2020. I can go ahead and set that up here today to be effective January 1st, 2020. And on that day, it's going to start estimating tax on all my different platforms. So if it's just my billing system, my GP or Business Central, or whatever billing system it is, or if it's that plus 3 other websites or 5 other websites, or a custom solution, it's turning it on for all systems at once. So you're not having to, and again, it takes the operational challenges out of the previous model, which was, I got to update all of these rates. The rates aren't necessarily accurate because ZIP plus 4 doesn't always represent the jurisdictional tax accuracy in certain states. Now I got to deal with taxability. I'm entering a new state. Is that really configured for both my billing system and these other applications? I mean, it's as you can imagine, it's a snowball effect. So by the check of the box, we're really turning it on. We're turning on reporting. And the next step you would have to do is, if we're filing tax returns for you, you need to set up what's your return. Is it a quarterly return? California would be. So you set up your quarterly return, your e-file login information, and we're going to be starting to be prepared and ready to file that tax return in California as an additional state to what would already be set up. To give you a sense on the transactional detail that comes into this system, we'll just pick one invoice here, and then we'll go to one report, kind of show some of the return process. But your document code is your invoice number, right? The line items specific on the order are certainly being passed over, and anything related on that line item that is taxed differently, it's really going to be calling that out. So, if it was an invoice that had 4 different locations they're being shipped to, it's going to have the tax rate specific to those locations, assuming you entered and passed that to us. And of course, if it's service versus product or installation to tangible property, it'll have those taxability rules and taxed appropriately for what those rates are on a state-by-state basis. All that flows into reporting, of course. We have, 35 standard reports. I like to show generally the summary report. It kind of gives you a feel for how really a lot of folks use the reports in general. So this is a summary report. And I know depending on how big your screen is, I'll just kind of talk through it a bit. But this is obviously showing on a per state basis your total sales, your total seller's use, and your total combined sales on a per state. And let's just do a for instance. Let's say I need to look into California. Someone had questions, or there's an audit question, or whatever the scenario could be. But the question is, what invoices hit this part, this county, within this defined time frame? I am 3 mouse clicks away from each invoice number, what lines are on the invoice, what line items are taxed. Of course, all this information could easily be dropped out to Excel. It's just that simple. So let's go to, where does that information go? Of course, since we have the data, if you're in 2 states, 3 states, you can file your own returns. It's not a big of burden financially or operationally, I should say, to do. If you go from 3 states to 30 states and you need to do it in the next 3, 6, 8 months, you know, it's a different story, right? So a lot of customers are saying, mea culpa, help us out, please file the returns. All you do is do the electronic power of attorney. Of course, that's the obligation we need to have on file to do the service. And then you schedule or build your tax calendar. And then each month we're providing really a worksheet of each return, each prepayment that you would approve and file for tax purposes. So we would come in and really take one amount out of your account to then file these returns. Oops. I'll show you a brief example of what that would look like. But the follow-on effect is, if you're in 30 states, you know, what happens after you file the return? Well, generally folks want to keep a copy of the return, right? They want confirmation of payment from the state. So all of that audit history of what was filed, the e-file transmittals, the return itself, and payments that were made are also contained in this tab as well for your audit history and confirmation. But in this example, we're taking a 101053 out of an ACH debit account, and then we go into all these existing e-file logins, complete the returns, complete the prepayments, take advantage fully of any prepayment discounts that are out there in states like Texas or others, and just work through the returns. So that's a little bit about AvaTax. The other components, and I'll just touch upon it briefly, is cert capture. So cert capture is that last additional element that we were talking about, especially with manufacturers and wholesalers, or really any company. When you go from a small footprint to a large footprint, the first thought is, do I really need to have much sales tax content and rules built into my system? My next thought that is not always thought of is, oh my gosh, we got 5,000 customers that we don't have exemptions for because we had no need to get them. Now we have to go get them, because if an auditor comes and we got nothing, we're really exposed, and we may or may not be able to collect what we need to in that event of in that timeline of an audit. So cert capture is specifically designed, and it integrates directly with AvaTax, so it knows the customer number, it knows the customer's exempt in that state when you capture this information, and it has the content or tools to know when these certificates expire, or the fact that you collected for one state and not all states. And what you're doing originally, to kind of give you some context, is you're going to first load in your existing exempt customers from your billing system. And the purpose of doing so is, obviously you would need to be able to attach documents and records to existing exempt customers that would be in those states. And in addition, you need the list of customers to send out a request to collect those exemptions. And I'll show you some of the mechanisms or tools that are used here in the application. So you bring in your customers. You generally can do something as simple as, I want to create a query where, let's just say, even I have an audit coming up or an audit notice in any state, and I want to look for our audit readiness in that particular state. I'm going to pick Alabama, first one off the list, make it easy. So it's going to analyze what records I have. Now, if you were starting from scratch, you would have nothing other than the fact that you know what customers and ship-tos you have in that state, and you know that you're exposed, and it's going to show that you're missing certs for all of those specific customers in that state. So, what can you do about it, right? Or how can you, track it? I'm going to move this bar out of my way. Bear with me. So one of the things that you may do is create a campaign, right? So what is a campaign? Is it's grouping this customer. Now I did Alabama, but you can do your entire customer base quite easily. But if you create a campaign, it's grouping those folks that you're missing or have inaccurate or incomplete information. And it has some intelligence to it. So if you have multiple campaigns going on over time, it's doing things like, hey, don't put this customer in another campaign. They're already in an existing one, right? So it's looking at, what's already going on with campaigns you have in process, but ultimately it's starting the workflow to really help deal with what exemptions represent long-term, which is a maintenance requirement, meaning how are they being maintained? How often can you reference them? How can they be reproduced in the event of an audit, and so on. So once you create the campaign, that's going to show up in the, of course, the campaign category, and I'll just kind of talk a little bit about what that looks like. So in this campaign, it's showing the list of customers that would have been part of that set that you've estimated. And as they start collecting or responding to your request, that those certificates will start to obviously, or those customers will come off the list. And then you're really setting up, in this instance, a round 1 communication, round 2, round 3. But what's powerful about the campaigns, and also you can request this from the ERP in terms of requesting a new exemption from the customer, but it's the email delivery, okay? Because you're using templates. The templates can look something like this, right? Where you're addressing the customer kind of like a mail merge with a specific letterhead, but it's creating a unique link so that it sends them out to a portal. And the leverage that we're looking to provide customers is that, if I collect the document on email, I got to take that, I got to figure out, am I putting that into a DMS system that really provides no value because it's not going to know what type of document it is, that when it expires, that it's only for one state, it's not talking to the tax engine. What this process is doing is you're digitally capturing the exemption from the customer with the data attached to it, and it's putting you in position just to review and accept it, and it knows the content around the exemption, plus the determination engine knows it. So your customer would come in and they would, all right, go ahead and already see, you know what, they already have my company information. I'm going to go ahead and start the wizard. Let's go ahead and add a certificate. You can design this to really only show a specific type of exemption. Certainly for our purposes, we have different types of taxes and that might be applicable from an exemption type. But, if you need a California resale exemption from this customer, they can really select those options. And now it's going to be asking them these specific questions on that California form. So what does it know? It knows the form, knows what form they should be providing. It knows that if they provide you a ridiculous permit number that doesn't match what that permit number is, it's going to be showing an error to the customer until they put it in the correct format. But it's putting them through the series of steps. The next step after completing this is to sign it with their mouse. And now they've completed an electronic document that's already a PDF that has the data behind the document attached to the customer number, already up for your review. So you're really coming in, you're reviewing the document, you're reviewing who it's assigned to, and you're accepting the document to be applied in the exemption management process. From a content perspective, we're also going to be providing you, obviously what forms expire in what states. So like, for example, if a Florida resale exemption expires every single year, but in other states it might be permanent, in other states it might be 3 years. For a different document type, it might be permanent, it might be 3 years, it might be 5 years. So each type of document can have different expiration requirements. And then the next thing that can come up, depending on the type of industry that you're in, I don't even know what form to use. Like someone might say, I don't know what form to use. You can go and literally look at each state form directly here in the console and just pull a blank form or get a pre-printed form, or take that form and send it directly as a one-off to that particular customer. So there's a lot to cover in CertCapture. I'll kind of leave it at that, but those are the tools, the mechanisms, and some of the things that are available to help you solve some of the challenges that we see consistently in dealing with economic nexus or just the persistent requirements of an expanded footprint with sales tax and being in several states. So Rocky, with that, I'll open it up for questions.
All right, great. Thank you, Matt. Very detailed presentation there. Appreciate that. We do have a couple questions here already, so I'll just remind everybody right now real quick that if you do have any questions, please go ahead and type those into the question box right now, and we'll get to those. So Matt, first question is, what ERPs does Avalara integrate with?
Oh, wow. So we integrate with 700 applications today out of the box or pre-built. And in the Microsoft arena, you're looking at really all of them. So everything from Dynamics GP, even SL 2011, to give you an idea. Of course, Navision, AX, Business Central, F&O. But then when you look in the Microsoft space in particular, you have a lot of ancillary products or other ISVs. You got your Santa software, your K-commerce, your binary streams for multi-legal entity, situations in GP or otherwise. So, we're really well covered across the spectrum in that space. And then, of course, other markets, if you're into the NetSuite or, really any core application you can imagine out there that's a publisher, we really have pre-built integrations to it.
All right, great. One more question here. We're in Florida, and Florida seems to be one of the holdouts. Do you have any idea if they will announce any changes?
Got it. Holdouts must be referring to economic nexus. Yeah, a lot of folks in the Southeast are trying to monitor when California or when Florida might enact economic nexus. Because if you're in Georgia but you don't have physical presence in Florida, you may have to really look quickly if you have remote sales going into Florida, because they're just so close. The likelihood of doing so is pretty high. It appears that there's some momentum that they're going to be looking at it next year. It's hard to say if they'll enact it. I believe they did already enact some marketplace facilitation laws, but I have to look back to see if that actually finalized or not. But with Florida, it's really the last man standing in terms of the bigger states that has not effectively passed economic nexus. Hard to believe it's going to be too much longer until they do. But your other, think of your other big states, right? Your New Yorks, your Texas, your California, Illinois, have all really enacted the economic nexus law, obviously.
Okay, perfect. Thank you, Matt. And that's all we've got right now, question-wise. So, Matt, any closing comments from you?
Just really, Rocky, thank you again for giving me the opportunity to talk our sales tax subject today, and thanks everyone for the time. Certainly, if you have any questions, please do reach out to your account manager at Velasio. If you would like to reach out to me directly, feel free to do so. I'd start generally with your Velasio account manager, and we'll go from there.
Okay, thank you, Matt, and I would echo that as well. Thank you to everybody who took time out of your day to join us. I'm sure you found it educational and informative, and we appreciate your time, Matt. So once again, thanks everybody. We look forward to seeing you on a future webinar. If you don't already, please regularly check on our website, velasio.com/events, to see all of our upcoming webinars and events. So again, thank you all for joining, and have a great rest of your day. Thank you.